to the Inspire Wealth podcast with Prof, where we dive into the world of real estate investing and wealth building strategies. I'm your host, Mallory Meehan. I'm a real estate professor, attorney, and seasoned investor here to guide you through the ins and outs of creating wealth through real estate. If you're looking to take your real estate knowledge to the next level, don't forget to subscribe to stay up to date with our latest episodes and offerings. Welcome to another episode of the Inspire Wealth podcast. I am your host, Prof M, aka Mallory Meehan, and I am joined today by Ted and Garrett Sutton. Welcome, guys.
Thanks, Mallory. Thanks for having us.
Yeah, thanks for having us on, Mallory.
So excited to have you guys on. This is my first time having fellow attorneys on the show, so this is very exciting. I get to nerd out with you when we talk about different types of legal structures. But first, why don't you introduce yourselves, tell our audience a little bit about yourselves and where you're currently working, and yeah, just give us an overview.
Great. Well, I'll start. My name's Garrett Sutton. I grew up in the San Francisco Bay Area, went to college and law school there, and spent all my summers up at Lake Tahoe, and I like skiing as well. So I moved to Reno in 1989 and had to take the Nevada bar exam all over again after California. 12 years later, that was not a fun summer. As you know, Mallory, that's not a fun summer.
I remember that summer was not fun.
Yeah. And so I practiced in Reno. I moved up here single, found my wife, we had Ted a couple of years later. And so I became very fortunate to become associated with Robert Kiyosaki and the Rich Dad Advisor Group in the year 2000. And for the last 20 plus years, I've written books. One of them is this one here, Loopholes of Real Estate. There you go. Perfect.
There we go.
And travel with Robert, and Ted's been fortunate to travel with Robert as well, spreading the idea of financial education, learning about how to have money work for you, especially in real estate. I think that's one of the best ways to advance your financial prospects. And so it was great when Ted went to law school and decided to, come into the practice. And so now the two of us are here in Reno, Nevada. We have offices in Wyoming as well. We do a lot of Wyoming LLCs. And Ted is going to take over the practice. So I'll let him introduce himself.
That's right. Well, in due time, it's not like I'm going to come in here and steal the show from him.
No, that's not happening.
Yeah. I mean, on paper, it may sound nice, but in practice, it doesn't work. Anyway, so my name's Ted Sutton. I'm Garrett's son. I was born and raised in Reno. I left for college. I went to the University of Utah for undergrad, where I got a degree in mining engineering, of all things. And, I worked at a mine in Chile the summer before I graduated. It was a great experience, but it made me realize I didn't want to make a career out of it. So after I graduated, I decided that it was the best choice for me to go to law school because, the legal stuff interested me. So I went to Wyoming for law school, which is great because we set up a lot of Wyoming LLCs. Took the Wyoming bar, moved home, took the Nevada bar, passed both. And ever since then, I've just been working alongside my dad, helping with corporate law, helping people set up LLCs, doing a lot of work with the Corporate Transparency Act, which is a new law that's a massive pain and it affects most real estate investors. So I've just pretty much I hit the ground running for the last 2 years, and now I'm here.
That's awesome. Well, congratulations on passing both state bars. That's no easy feat for both of you. Garrett, I mean, the California bar was harder than any other bar. So, I mean, Nevada should have just been a piece of cake.
Well, but it was 12 years later, and criminal procedure had changed entirely. Not that I remembered it anyway.
Right.
So 2 bar exams is enough, as you know, Mallory. That's just
absolutely
right. California has gotten so difficult. Mm-hmm. I think the pass rate is now 33% or something. It's awful.
I think California is just discouraging anybody from wanting to live there, work there, be there, and
I mean, the Nevada realtors gave California their award of excellence because California is helping all sorts of real estate sales in Nevada. People are moving here. Real estate agents are doing really well because of California's policies.
That is very, very true. Very true. I think the state of Texas would also like to give California a big round of applause.
Right, exactly right.
All right. So I am curious as to what actually inspired you guys to specialize in asset protection and corporate law and really focus on entrepreneurs and real estate investors.
Well, growing up, my dad was a judge in Oakland, California. And, you know, at the dinner table, I would hear these stories about people who operated as a sole proprietor and lost everything. And if they'd only operated as a corporation, they didn't have LLCs back then, but if they'd only operated as a corporation, they wouldn't have lost everything. And that really had an impact on me, that one simple change in the way you do business can protect you. And I took that with me to law school, and I found that corporate law was the area of law I enjoyed the most. I mean, everybody loves common law, but who practices it, right? But you know, I really enjoyed corporate law and the ability to set up entities and structure people's affairs in a way to help them stay protected. And so it just kind of came to me naturally. And then moving to Reno, Nevada. Nevada is one of the best states for asset protection. And I fell into, you know, setting up Nevada entities and eventually Wyoming entities to protect people.
Yeah, I definitely always advise my fellow real estate investors to either set up a holding company or set up their LLC through Wyoming, Nevada, sometimes Delaware, but I think Delaware is probably the most expensive state out of the three to kind of incorporate and make sure that the filing fees are done properly. Now tell me more, and Ted, don't worry, I will get to you, but I have one question for Garrett I want to focus on first. Tell me how you met Robert Kiyosaki. How did this all come about in 2000? Because that has to have influenced basically a lot of where you ended up today and the way you practice and how you can reach a larger audience.
Well, you're right, Mallory. It was just really great meeting Robert and being able to be associated with the whole Rich Dad team and philosophy. It's interesting. I rented office space with a CPA here in Reno who moved to Phoenix, and she started doing Robert's work. And they were looking for a Nevada attorney to be part of the Rich Dad team. And she was nice enough to recommend me. They interviewed a couple people. And I have to say that the reason Robert selected me was because I had played rugby. So Robert is a huge rugby fan. We've gone to the World Rugby Cup a couple times. I love rugby. I played until I was in my 40s. And so, you know, rugby was the connection of all things.
You want to hear something that's really funny? My
Sure.
husband played rugby in high school and college, and his nickname is Hooker. And our wedding hashtag was got hooked based on his rugby nickname.
Yep. Well, at our wedding, I had the rugby club there, and all we did was sing rugby songs.
Oh, I'll tell you, it's a different crowd of people. I never realized what was out there. I think when I first met him, I wasn't even sure what rugby was, and I was getting rugby and lacrosse confused, and he had to educate me. And so now we watch a lot of rugby. We're hopefully going to be going over to Europe soon to catch a couple games. And so, yes,
Well, I just want to say I like your husband.
You know, it's funny. He works in this building as well. He's like directly beneath me, and I should have like brought him up.
Right. We could tell some more stories.
Oh, yeah. He has a metal plate in his arm from playing, and
Yep.
Yeah, you guys could talk rugby forever then, but I'm going to talk real estate because that's my thing. So here's an open question for both of you. For new entrepreneurs, those that maybe haven't ever started a business or thought about creating an LLC, what kind of factors do you suggest when they're evaluating what structure is best for them?
Yeah, I would say that there's a few factors to take into account. When it comes to the specific entity type, I mean, 9 times out of 10, we recommend an LLC. I think a lot of it depends on what you want to do with your business. If you want to go public, then it may make sense to set up a corporation, have it taxed as a C Corp. If you have a smaller business, then in that case, it would make sense to have an LLC just because there's a lot more flexibility with that entity. I think another thing is the purpose too. Like if you want to gift assets to your kids, maybe a limited partnership's right. So there are multiple factors to consider, like what type of business you're running, what you want to do with it. If you hold assets, what entity's right for you. So there are a few things. I mean, most times, in all honesty, we just set up LLCs for people just because they're the most flexible entity. And you can use them whether or not you want to hold title to assets or run a business where you're employing people. So there are a few considerations, but in most cases, we like using the LLC.
And the LLC can be taxed however you want. It can be taxed as a C Corp, as an S Corp. If there's only one person, it can be a disregarded entity, meaning all the tax obligations flow onto your personal return. So there's just a lot of flexibility with the LLC, and you have better asset protection than you do with a corporation, except for Nevada. Nevada extends the charging order protection to corporate shares, but the LLCs have a lot going for them.
So if I am investing in real estate and I'm utilizing an LLC to purchase my assets, I always ask this question because I get a variety of answers. At what point should I create a new LLC when I begin to purchase multiple real estate assets? How do you advise clients on, whether or not multiple properties should be under one, whether they should have separate for each of them?
Mallory, it's a judgment call. And what we do is we tell our clients the risks. If you have 10 properties in one LLC and a tenant sues, they could get the equity in all 10 properties because they have a claim against that one LLC that happens to own 10 properties. So some of our clients, knowing that, will only put one property in each LLC. A state like California, where it's $800 per year per LLC, you may have clients put 2 or 3 properties into one LLC, but we leave it up to the client because it's really a judgment call. The best asset protection, of course, is one property per LLC.
Now, how do you recommend holding companies and bringing that into the mix?
Yeah, so when it comes to using holding companies for rental properties, we like using a Wyoming LLC. So, if you have, going off my dad's example, if you have a rental property in California, you have a California LLC, then instead of you being the owner of that California LLC, we set up a Wyoming LLC on top to be your holding company. And the reason we like Wyoming is that it's a very affordable option. It only costs $100 to set up, and the annual filing fees are $62 a year. Another benefit there is that it has anonymity. That's kind of a hard word. I think of anemone in Finding Nemo, but anonymity. So your name is not on the Secretary of State's website. So that gives the owners a little more privacy. And then also, Wyoming has the charging order protection, which comes into play when you're sued personally. So that's a lien on the distributions from the LLC. So if you're sued personally, you lose in court. The only thing that person can get is a charging order on the Wyoming LLC. So it makes it more difficult for them to collect from your real estate assets. And we like Wyoming better than Nevada and Delaware, just because Nevada's annual filing fees is about $400 a year, so it's more expensive. And then Delaware LLCs also have quarterly reporting requirements. So, you know, it's a little bit more onerous to have a Delaware LLC because of those requirements. So yeah, in most cases, we just like having a Wyoming LLC that holds your interest in all the rental property LLCs beneath it.
Yeah, makes total sense. So Ted, when are you going to start writing books?
Right. Great
He's got
question.
one. He's got one already.
There's one in the works right now. You know, it's TBD. It has taken a long time to write. And we're also getting an illustrator too. So that should be sometime next year, you know, but we'll see. But I did publish one book. It's titled The 5 Tricks to Teach Your Kids About Money. And it's a free ebook that you can download. The whole gist of it is that they're not necessarily tricks like a prank. They're more so methods that parents can use to boost their kids' financial IQ. So, you know, it's a free book. You can download it at Sunstream, which is a new platform that my dad's starting. It's called Sunstream. Anyway, the website.
2 N's.
Yeah, so if you go to the address bar, you type in sunstream.com/5tricks. That's SUNNSTREAM.com/5tricks. You can download the book for free. I've already downloaded about 200 copies. You know, my dad's at 1 million, so I got a little catching up to do.
You do have some catching up.
Yeah, so I got one ebook and then I'm working on one book right now.
Love that. Love that. Well, let's stick with the topic of parents with children. So when you're speaking with those that are almost starting to figure out estate planning or trying to figure out how to reallocate their assets, what are some of the advice that you can give people when they're thinking about, you know, should I be gifting my house or transferring the ownership of my house? I have rental properties. I want my kids to take that without having to deal with the estate taxes and having to go through, you know, the whole probate process. What kind of advice do you give those people?
Well, those are good questions, Mallory. I mean, there are a couple things to consider. Yes, you don't want to have to go through probate. So the structure that Ted mentioned, where we have the Wyoming Holding LLC owning all the title holding LLCs, the Wyoming LLC should be owned by, if you have kids, a living trust. And the living trust means that you don't have to go through probate, which is a court proceeding that the attorneys make out really well on the probate fees. The living trust says, I know what I want. I'm appointing someone to be my trustee when I pass, and they'll take care of the distribution, and we don't have to go to court. And that is a great way to go. Now, when you pass in that regard, your kids get a step up in basis, so that if you bought the property for $50,000 and now it's worth $100,000, your kids take the value of the property at your death at the $100,000 level. So they don't have to pay, they wouldn't have a tax if they sold it immediately. So a lot of times parents are waiting to bequeath items to their, or real estate to their kids after they pass. So you get the step up in basis. The other issue we have is the gift tax. And you can gift, what is it now, 13+ million per spouse during your lifetime. That law changes in 2025. It goes back down to 7 million unless Congress does something. So we're going to see, you know, if the election turns out a certain way and the threat of a lowered gift tax is an issue, we're going to see a lot of gifting going on at the end of this year. So those are some of the factors. Do you want your kids to have control is another one of the property. Ted mentioned the limited partnership. That's a great way to go. If you want to gift to your kids, not worry about the step up in basis or anything, but gift to your kids now, but maintain control. The limited partnership allows you, with as little as 2% general partnership control, to control that assets. The kids can't force you to sell it. And then at the appropriate time, you can make the kids the general partner. I know this is a little complicated, but you know, it is a way, these are strategies that we talk about in Loopholes of Real Estate. But it's a really good question now because we don't know what's going to happen in November. We don't know what's going to happen with the gift tax. And some people have talked about getting rid of the step up in basis. So there's a lot of uncertainty out there right now.
So we talked about the step up in basis, and I think what also pairs well as far as tax purposes are the 1031 exchanges. And I think that's also maybe on the chopping block to get some restructuring as well. How do you educate your clients when they're looking to sell? They've maybe inherited a property, they've had it for several years, they've now paid it all off, own it free and clear, and the appreciation rate has far exceeded probably what they ever thought. They certainly don't want to pay the taxes by just selling. So educate us on your recommendations for 1031s.
Well, the 1031, it's named after the tax code, section 1031. People wonder, where do these names come from? It's really just from the IRS code.
Yes.
We lawyers aren't that creative. We couldn't call it the exchange code or whatever. Anyway, it's the 1031. So what you do is you have a property that you've decided that you want to sell, but like you say, Mallory, you don't want to pay the tax. So you enter into a transaction where you sell the property, the proceeds go to an intermediary, not you, but someone who's an independent third party. They hold on to that money until you identify another property that you want that money to go into. And by doing that, the like-kind exchange, you haven't, the fiction is that you haven't really sold the property, you've just transitioned into a new one. And so there's no capital gains tax. And a lot of people use the 1031 to build their wealth. You start out with smaller properties. You don't want to have the money that you've invested be reduced by capital gains tax. So you just keep transitioning into more and more expensive properties. And the 1031 transaction for a lot of people is a great way to go. There are some strict rules. If you follow them, you can blow a 1031 transaction by not finding a property soon enough. And so you want to work with a very sharp 1031 exchange expert who will guide you through this process. But I've done a couple of them and they're not that complicated. And certainly I did a 1031. We were talking about California. I did a 1031 out of California. And, they're saying, well, when you sell that property in Florida, you got to pay us back. And I have to file a form every year saying I haven't sold the property. But that's what California is doing on 1031s because a lot of people have made a lot of money in California real estate. They don't like what they see. And so they're transitioning out of California. The 1031 is a federal tax law. And the state of California will, when you do sell that property, when you cash out finally, the state of California wants their share. So that's an interesting little wrinkle when it comes to 1031s.
But in that case, you could essentially create a living trust, put that property into the living trust, not sell it. It passes through your state tax-free step-up basis to your heirs, and therefore they wouldn't owe California anything.
I like your thinking.
Is that
That's good? No, that's good.
Yeah.
Yeah, that can work.
Okay. Just, thinking out loud. Let's try to beat California, I guess.
Yeah.
Okay. So Garrett, I have read all of your books and I want to know of which book do you feel has had the biggest impact on readers?
I would have to say Start Your Own Corporation because that's kind of the entry level book. And most people have read it. If you're a real estate investor, Loopholes of Real Estate is a really good one, but Start Your Own Corporation, I have that version here. Start Your Own Corporation has been a good entry level book. It's by far the best-selling book I've done. Just because we kind of lay out the law through stories. People learn best through telling a story. And so we tell a story and then we apply the law to what happened in the story. So we try and make it really simple. And start your own corporation allows people to gain that information. Again, Mallory, they don't teach this in school. I wish they did. So you have to go out there and gain this information on your own. And the last thing you want to do is learn the hard way that by not having a corporation, you have no asset protection and they can get all of your assets, not just the value of your real estate, but all your other brokerage accounts and all your other assets. So people need to take the affirmative step of learning about asset protection.
So I would imagine that Ted, you kind of probably also have the same storytelling ability as your dad. I could just tell by the way you're speaking, so that's awesome. So why don't we set up a case, a scenario, and you walk us through maybe one of the hurdles or challenges that you often see clients facing and how you would navigate that particular client's issue.
So are you
Broad.
okay? So yeah, if you have a client, let's just use an example of that they're setting up a rental property, right? So, what we do is, let's say that they were to have a rental property in Pennsylvania. We would set up a Pennsylvania LLC for that rental property. We would set up the operating agreement. We would do all the filings with the Secretary of State. We draft meeting minutes for them. We do all the paperwork. There are some little wrinkles with Pennsylvania law, like there is a big transfer tax there, so they need to be aware of that. We notify them about having insurance on the property. That's something that real estate investors need to have because it is the first line of defense. And then also making sure that you have a separate bank account for your LLC. Because if you set up an LLC, but you don't have the separate bank account, well, then they're still going to collect from you personally. So we want to do that. We need to make sure that we have the Wyoming LLC on top that owns your interest in the Pennsylvania LLC. Do all the same things for the Pennsylvania LLC there. Draft all the paperwork, make sure that the ownership structure is correct. So, there are a lot of considerations to take into account. But we help with just mainly the basic setup process. But at the end of the day, it's really important though, because there's a lot of people out there who think that they just file with the Secretary of State, get a registered agent, and then bing, bang, boom, they're done. But the reality is you do need to take additional steps to properly protect your LLC, whether you use that for rental properties or your business. So, it just depends on the specific case, but it is important to do the setup process right.
So let's talk about the horror story where they didn't set up the LLC.
Yeah, let's talk about that.
Yeah, so they know that they should invest in real estate. They buy the duplex. That's their first purchase. They didn't learn anything about entities, LLCs, asset protection in school because, of course, it's not taught. So they just go ahead and blindly put title in their individual name. I mean, that's how their parents owned real estate, right? In their individual name. The tenant then sues them over a condition on the property. And they learn the hard way that the tenant can not only get the equity in the duplex, but they have a claim against them individually because that's who was on title when the tenant was injured. So they can go after Joe, not Joe's LLC, but Joe personally. And if Joe has a brokerage account with Charles Schwab in his name, they could get the $50,000 that's in that account. They can get the equity in their house. Hopefully they've filed a homestead. Pennsylvania doesn't have a very good homestead at all. But other states have homesteads. You want to have that homestead in place, but they can get the equity above the homestead. So in this case, Joe learns a really hard lesson that by not setting up that LLC, everything he has is exposed. And so, we want Joe to take title to the LLC right off the bat. We want him, if he's got that expensive brokerage account, if he's got 50,000 or more in a brokerage account, stocks, bonds, cash, we want that to be held through a separate LLC. We wouldn't own it in the duplex holding LLC because of the tenant sues, the brokerage accounts in that LLC, they could easily get it. We want it in a separate LLC apart from the rental real estate LLC. And so we need to take all these steps, because if you don't understand the nature of our system, whereby attorneys are well rewarded for suing people and they can get after your personal assets pretty darn easily. If you don't know that your defense against that is LLCs for your real estate, for your brokerage, for your personal residence, if you don't have a good homestead. If you don't know that, and of course it's not taught, then you're going to suffer.
Mm-hmm. No, I think that's a great point. What if I said, okay, well, why don't I just carry insurance to protect myself so that if a tenant does sue, then the insurance company has to cover it?
Right. And, that's really common. I know a lot of people who do that. Having insurance is important because it's the first line of defense. But insurance companies have an economic incentive to not cover every claim. And if something bad happens on your rental property, I mean, you hope that insurance covers you, but in the event it doesn't, well, if that happens, then like my dad said, all of your personal assets are exposed. So having insurance is good, but you need to have that second line of defense with the LLC. Because, in that case, they're only limited to reaching the equity inside that one LLC instead of all of your personal assets.
Yeah, no, that's a great point. I think a lot of my students want to start out in real estate either by doing house hacking, and the duplex is a great example. But the other more popular method is they want to get into short-term rentals. Now, this market has drastically changed over the past couple of years with a lot more local regulations and a lot of hurdles that you have to get through. Give me a scenario. If I were to say I want a property and I'm going to use Florida as the target destination, I want to buy a short-term rental in Florida. What are some considerations that you advise your clients maybe before they make that move?
Well, for any short-term rental, you definitely want to use an LLC to conduct your business through. The short-term rentals, like you say, Mallory, up at Lake Tahoe, they have restrictions now where you can only do short-term rentals for 30 days, right? It used to be weekends, and people would go up there and party and create a problem. So now the people who invested in short-term rentals are realizing they can only rent them for 30 days at a time. So you've got to be, sure of what's going on in the jurisdiction you're considering. The short-term rental companies do have insurance policies. So you want to make sure that the policy that they say they're providing you with will cover you. You may want to have an additional policy as a backup. Because these people get into these short-term rentals and they're there to party, and people do get injured in these short-term rentals. So I think you have to consider a couple extra steps or extra considerations. It's not like investing in a duplex where you're going to have one tenant in there for a year. You've got people coming in and out. You've got cleaning issues. You've got wear and tear issues. There's a lot more to consider when you go with the short-term rentals.
So if I have younger investors that are trying to get into the real estate game, what kind of advice do you have for them to consider what maybe their first asset in the investing game should look like or could look like for somebody just starting out?
Well, I'll say what I think. I think you should get started as soon as you can. I mean, I wish I invested in real estate when I was Ted's age. I mean, I got a later start. So I think getting started, and if you make a few mistakes, so be it. You're going to make some mistakes. I did, and you just learn from them. It doesn't deter you. It makes you a better investor. But Ted is investing in real estate now. What are your thoughts on it?
Yeah, so I think it's important to start small and work your way up. I think there's a lot of people I follow on social media who sort of, show how they made money in real estate. And I think it sort of sends a message that like you need to go all in right at once. I don't think that's the case. I'm 29, I own one property right now. And on top of that, I'm also a minority shareholder in that property. So, I own a minority interest in the LLC. I'm starting small. I'm doing it more so to learn the ropes. Currently, I own a piece of vacant land outside of Asheville, North Carolina. And the goal there for me is just to do your first deal, go through the process, see what goes into it, what expenses you need to pay. And the hope is that the property will appreciate in value and then I'll sell it. But I think it's important to just start small. If you need to have a more seasoned investor do things with you, I think that's a great idea just because, they're the ones who can take on all the risk right now, but they can also walk you through the steps of what you need to do. So, I have that piece of vacant land right now. In the future, I plan on investing in some syndications, locally or wherever else. But and then from there we'll see what happens. But I think the important thing is that Rome wasn't built in a day. All this, whether you see people on social media, they say they have 100 doors or whatever. That didn't happen overnight. And a lot of times, like they had a mentor guide them through the process. So, start small and then work your way up from there. That's my piece of advice.
No, I think that's a great piece of advice. And I love the fact that you're saying find a mentor who could help you along the process. And I mean, you have one of the best mentors you could probably have in the industry. But how would you suggest maybe younger people go out and find somebody who can be a mentor? What kind of, opportunities might there be that you can actually find somebody to trust, or you can find somebody who would be willing to help you get through the ropes?
No, and that's a really great question, Mallory. I mean, obviously, I'm very fortunate to have him as my father. But I have a friend who lives in Atlanta, and he is into self-storage right now.
Mm-hmm.
And he just went on Bigger Pockets, and he found people. He found a mentor that way. He found a mentor who was local in Atlanta. He worked for him for free for a year, and he just learned all these things about investing. So I think, internet forums is a good way to go. Bigger Pockets is one. I'm sure there's a few others out there. Another thing is that I know that there are real estate investing clubs and groups in certain in certain cities. You can go online and find them. I know Reno has a real estate club. I think a third thing would be business networking events. You can find people who are in like residential, commercial real estate. You can find developers that way. So there's a few things that you can do. I think, it could be online, it could be in person, but at the end of the day, if you just get out there, you put yourself in certain situations, there should be somebody out there, who'd be happy to guide you through the process.
And people do want a mentor. It's their way of giving back,
Mm-hmm.
and so don't be afraid. I mean, there are plenty of people out there that would love to help an aspiring young real estate investor make their way.
Yeah, I feel like we have to help pave the way for the next generation, especially considering where our country currently sits in debt and, litigious activities consistently being, a trend. What would you say? And this is kind of, I'm going to take a step back. So I love talking about different asset classes. And so, Ted, you talked about self storage. Are you seeing any particular focus on a specific asset class with your clients, or do you have a favorite asset class currently that you are really looking to dive deeper into?
Well, you go first, Ted.
Yeah, so self-storage does sound interesting. I don't have any, in all honesty, I don't have a specific asset class in particular right now. We help clients who invest in all different types of assets, whether they have just a business brokerage account that they hold in an LLC. Some people invest in, single family residential houses. That's probably the most common that we see is, they buy one house in a suburban neighborhood, one LLC for that. I think self-storage is one of them. There's a few others, just with commercial real estate, with multifamily apartment units. That's pretty common too. Nothing in particular. I think just for me personally, it's just getting my feet wet, getting the experience. And then if there's a specific asset class that I see from there, then maybe I'll go in that direction. But nothing specific.
Well, and you don't know at the start. I mean, you've got to just get in there and test it. So my wife and I had apartments, and she didn't like the management, all those issues. Some people love it, but she did not. And so we've kind of transitioned in the last 10 years to the triple net lease properties, where you have a strip center, with a T-Mobile in it and a Panda Express, and you have some national chains in these strip centers, and they pay all the property taxes and all the repairs, and you get a check every month. And they're good quality clients, tenants, and so you always get that check. You're not making as much as you would if you were managing your own apartments, but there's many fewer headaches in dealing with these triple net leases. But this is for some, this is an investment for someone who is maybe a little bit older and doesn't have the time or energy to deal with apartment complexes. So within the field of real estate, there are all these segments that you can pursue, and some of them will be based on where you are in your lifetime. I mean, Ted should be out there, and he will be out there working on or storage units, right? And, some multifamily. But as you get older, that idea of a check every month coming in from a triple net lease property is pretty good. So,
absolutely. I love the triple net leases. I started out in commercial brokerage, and so that's kind of how I made my shift here into academia. And so commercial investments always have a soft spot in my heart. Now let's talk about some of the shifts that are happening within the legislation and some legal concerns, especially given that this is a election year. And recently, we saw the Fed lower interest rates by 50 basis points, and there's talk that they may do another 50 basis point drop later on in this year. With rates coming down and then uncertainty in the market, what kind of advice are you giving your clients currently to try to help, settle them out and help them weather the storm, if you will, and maybe release some of the panic?
You raise a good question about the interest rates. My take is, yeah, people thought it was good. You're going to have more people investing in real estate, but my sense is people's concern is not the interest rate, but the election. That what happens in November is much more important to people than a small or even significant interest rate cut. And so people are on the sidelines waiting to see what happens. I know a lot of investors who have just kind of stopped investing to wait to see what happens. So that's what I see ahead of us is, people waiting to understand what's going to happen with regard to Washington.
Yeah. I think that that's probably been one of the biggest topics currently is how the economic plans are going to be different on either side, and something that I've continued to try to educate my students. Also that, it's not just about the presidential election, but about your local market, and your state representatives are, sometimes going to have a larger impact directly on you than, who's the president of the United States. And so I try to encourage educating people on really knowing what their representative is standing for and align with their policies. So you guys have been working together for the past 2 years, is that correct?
Yep.
So what has been the most rewarding moments, Ted working with your dad, and then Garrett working with your son?
Hmm. Yeah, well, I think it's rewarding just because people like the fact that there's continuity. Um, so he'll be around hopefully for a million years. But I think we're all mortal. But no, anything anyway. It has been really good just because he has showed me. He's introduced me to people. He's sort of shown me the way of about how we conduct things here. And it's nice because of the way he operates, a lot of our clients are happy. We do provide a good service, and it's good to see that they have a smile on their face. Well, at least most of them.
Until you tell them about the Corporate Transparency Act, then they get angry.
Yeah. So it's been really rewarding just because people like the fact that he's mentoring me. There's continuity there. But it's rewarding just because at the end of the day, we have a positive impact on clients' lives, because we are providing a good service for them and it'll protect them down the road. So I think just sort of the positive reinforcement that I've received has been the most rewarding thing.
And for me, of course, having your son in the business, I mean, that's a lot of parents' dream, so it's been great that way. It's also been kind of fun, Mallory, because, he's learning about asset protection and LLCs and corporations, but I'm also teaching him about collecting money and going to small claims court. And, some of these things that you wouldn't associate with asset protection, but you've got to be able to stand up in front of a judge.
Mhm.
And so 2 weeks ago, we went out to Fallon, Nevada, east of here, and Ted had to get up and present himself in front of a judge. And so that's been fun, going back, because I haven't been in court for years, but you need to be able to walk into court and present yourself and know how to do it. So it's been kind of rewarding to go back to that and help Ted understand what it's like to be in court.
Yeah. So Ted, did you watch My Cousin Vinny before you went into the courtroom?
No, I probably should have though. It was
He wore a good sport coat.
Yeah,
Okay.
He didn't wear the
No.
He
what
didn't
was it?
wear
The
the
velvet,
leather
the
jacket?
pink,
No.
the pink velvet
Yeah.
coat.
Yeah.
No, I mean, to be honest, it was a rough go. I didn't say going into court was the most rewarding thing for a reason.
Gotta learn how to do it.
Yeah, but it
Yeah.
was a good experience. I got to get my feet wet. So
Yeah, I mean, and I think that's exactly what you said about real estate investing is, you just have to be able to pull the trigger. And I think with a lot of people, they get stuck in this analysis phase where they'll continue to look at properties, think it's a great deal. They have the capital that they can deploy, but then they never actually go ahead and do it. And, I constantly hear that. And people always ask me, oh, well, what markets are you investing in? Or if you find a good deal, let me know. And I'm like, if I find you a good deal and you don't take it, I'm going to be upset because I would have taken it if you know,
Go find your own good
go
deal.
find your own deal. Right, exactly. Um, Garrett, how are you still working with the Rich Dad family, and how is that going, and what are you working on in the future?
Well, because of COVID, the number of events have gone down. People just aren't going to big gatherings as much. So we haven't done that as much. Robert continues to travel. He's on his way to Japan now. They love him in Asia. They love him in Australia, South America. So he still is out there. But these bigger events aren't happening as frequently. But that's fine. I mean, I don't need to travel all the time. But we still work together. We still have book studies together. I'm still in contact with Robert, and he just loves to teach, and he will teach until his last breath. And it's just, I get on the phone with people, Mallory, and they tell me how much Rich Dad Poor Dad has meant to them. Because Ted and I are kind of on the front lines. People read Rich Dad Poor Dad. They understand that they need to take steps to improve their financial standing, and they're calling us and talking about asset protection. So we hear it all the time about how many people have been moved to move forward through Rich Dad Poor Dad.
Yeah, no, I definitely am, a fan of that book as well, which is another reason why my company is called Inspire Wealth. And I'll give you a little clue. My acronym is actually Inspire, so it's investing specifically in real estate.
Like it.
So
That's good.
yeah,
Clever.
that's my little spin on my company name. So future, what does the future have in store for you, Ted, besides a book coming out and any other things that you guys are currently working on?
Well, I think a lot of it's just going to center around the business itself. There's a lot of things changing just with the internet and social media and everything like that. SEO is really important. Having a social media presence is really important. So, I've just been kind of hitting the ground there, just like writing articles. I do YouTube videos once a week. So if you head on over to, if you go to YouTube, type in corporate direct in the address bar, you'll find our channel. I post videos there on corporate law once a week. So, that's something that I've been doing. The book is in the works right now. It'll be TBD. Hopefully it'll get published next year. So I'm doing that. And then, just like finding other events to go to, educating people on corporate law and asset protection. So yeah, I mean, the future is bright and I'm looking forward to it. But, at the end of the day, it just involves taking action now. So there's a few things going on. But the plan is I want to make sure that our business is in as good of a position as it can be in the future.
So, now that Ted's coming into the business, I mentioned we've started this platform, Sunstream, SUNN. As a kid, I made movies. I've always enjoyed making movies. So, some friends and I are starting Sunstream. We're on our fourth documentary. We've made one feature-length movie. A movie's kind of like a duplex. I mean, it generates money over time.
Yeah.
And so we're making I can't tell you one, it's really a great documentary we're making. But we've made one called Symphony of the Holocaust about a fellow that was caught up in the Nazi death camps and survived. And his story is just fascinating how he made it through. We've done a documentary on Max Patkin, the Clown Prince of Baseball. We did a kids movie called Kangaroo Kids. So that's what I'm working on now is making movies and as well as continuing with Rich Dad and helping Ted in Corporate Direct. But it's just time to do some more creative things that I've always wanted to do.
I love that. That's awesome. Well, I would love for you both to come out here and speak to students because again, that's part of my mission is to try to educate people. So maybe we can coordinate a time when you and Tom can all come out here and we can have a nice event. I don't know if you've ever been to Pennsylvania before.
Of course I have, but I haven't been to Penn State. So
Well, there you go. I
we'll
would
have to do it. We'd have to do it around a game.
Well, we could definitely do that.
Yeah.
Or is it too busy then to even get anything done?
So we become the third most populated city in the state of Pennsylvania on game days.
Yeah.
We
Yep.
have 110,000 people just inside the stadium and other people who'd come just to party. So like your short-term
Wow.
rental situation, infrastructurally wise, it's challenging.
Yeah.
Right.
Okay.
But I would certainly love to host you. Maybe we can do it around a rugby game.
There we go.
Yeah.
That'd be great. We might get Robert out for that.
Yeah.
Oh, okay. Well, maybe we should try that because I know that my husband's trying to do a rugby banquet for some of his state high rugby colleagues that I think it's now the 30th anniversary of them starting rugby at State High, which is our local high school here.
That's great.
Wow.
Yeah.
Good.
So, how can people get in touch with you? How can they follow you? What's the best way to reach you both?
Yeah, so if you go to corporatedirect.com, just type in Google Corporate Direct, that goes to our website. You can schedule a free 15-minute consultation with one of our incorporating specialists. They're very well versed in asset protection, specifically for real estate investors. and especially beginning real estate investors too. And on top of that, the website also has a bunch of free information. We put out articles that educate people on corporate law and asset protection. Another place you can find us is, as I already mentioned, is on YouTube. If you type in Corporate Direct, you can see our YouTube channel. And if you could subscribe to that, that'd be greatly appreciated. I'd like to get the subscriber numbers up. So the more that we have, the merrier. So those are the two places that you can find us. And, if anyone wants to get started on their real estate journey and protect their assets the right way, we'd be more than happy to help you guys out.
Love that. And we'll be sure to put that into the notes for this show so that everybody has access to directly going to the YouTube station and subscribing and giving you a couple thumbs up. Yeah, absolutely.
Sounds good.
Well, thank you both for being on the show. I certainly enjoyed this. And for those listeners, if you're thinking about getting into real estate and want to ensure that your properties are protected, be sure to check out Corporate Direct, as they can certainly help you establish your LLC and make sure you are all protected. That's all we have for today. Thanks for listening to this episode of Inspire Wealth. I am Prof M, out. And for those who want a more hands-on learning experience, check out our online courses at inspirewealtheducation.com. Whether you're just starting out or looking to expand your investment portfolio, I've created step-by-step guides and resources to help you achieve your financial goals. So hit that subscribe button and let's start building your wealth one episode at a time.